All right. Good morning, everybody. So the expansion began, right? We're headed down. No, maybe. I'm not sure. This looks a bit like profit taking. We do not have confirmed short signals. We just have, at the moment, a little bit of profit taking. Looking at what's going on around the world, Germany down a quarter, NASDAQ, uh, same, about a quarter. Hong Kong, slightly red, but not much. S&P and Dow really close together, and small caps down the least. Japan barely up at all, and UK up a quarter. We're just kind of hanging out still. We got the 20 year today. We're not supposed to have favorites, but I do like that 20 year. We're going to get the meeting minutes from the FOMC meeting. Look, this is not FOMC. I see this mistake all the time where people are like, oh, it's FOMC day. No, it's not. It's the minutes, the difference between the two, right? It's like saying a Volkswagen and a Porsche are the same just because they have 4 tires and a motor. Nah, it doesn't work that way, right? These are two different things. There is a Bitcoin symposium, like that big fancy word, going on in Jackson Hole at the same time as the regular Jackson Hole event. Kind of offsets the two, right? And then you got people from both worlds intermingling, going back and forth. There's been interviews happening before it all even kicked off, but now it's kicking off Wednesday. Is the start of the whole thing. Friday, we'll get Powell. So watch the headlines. We could see something coming out today. We're not really expecting anything today other than, what you see on the docket, but anything can happen, especially if they get taken out of context. The main ones that we can see coming is the crude oil inventories at 10:30, the 20-year auction at 1 o'clock, and the FOMC minutes at 2 o'clock. This is going to make the afternoon different than what you're used to. Right? A lot of times we get most of our data at like 8:30, sometimes around 9:45 or 10 a.m. we get data. Today it's going to be different. In the later part of the day, starting at 10:30, and then even with Waller chipping his teeth at 11 o'clock, from 10:30 on through the rest of the day, we have the potential for some significant shenanigans. You like that one, huh? So just be mindful that today is not the normal day, and that while the afternoon is usually where things calm down and stay the course, it could just be a slugfest. We saw a significant attack in the QQQ option structure yesterday. There, it was like everybody was waiting for it, and then they all pounced at the same time. But at this point, it's still just profit taking. The moves we've seen, there was no fear in any of this. People weren't scrambling for the exits. It was very clean and orderly and organized. We did get the NASDAQ down quite a bit, right? It made it through the 20-day and all the way down to the 30-day. We have a 310 cross on the NASDAQ as well. That's a surge signal to the downside. But it's worth pointing out, we don't have a higher low yet, right? This hasn't turned and come up. And until you get that turn and it starts to come up, it's just still falling. There's nothing to mark yet. technical analysis is about identifying, highs and lows and market structure. We don't have a pullback. So until we get that, we don't know what we have yet. We don't know where the turning point is. The put wall was rolled back down, not all the way back down, but so let me say that differently. The put wall was rolled down, not back to its previous location, but back in the direction it came from. It didn't help though. Let me update this put wall because that's still yesterday's levels. They had rolled it up into 64.56. And I mentioned yesterday that it could very likely just be, let's use Powell's word there, it could be transitory. That it was maybe just there as a blip and then it would go back. And then we wouldn't know for sure unless it stayed there for more than one day, which it did not. It's already moved. And so now it's down here at 63.20. Now, when that thing moves, I normally share the chart showing in a line graph where it has been. And I show the call wall. It's just 2 lines, the simple chart. Today, I left one of the lines on so that there's 3 lines. There's the gamma index on there as well. And you could see the significant fall in the gamma index starting last Friday and dropped down with the markets. Yesterday, the idea was we didn't really have anything in the pre-market telling us that we could get a move in either direction. And I mentioned that we didn't have anything, right? We didn't have any push. We didn't have treasuries, bonds, Mag 7, commodities, nothing. So the plan was get out of the box to do anything else. Break the Globex low, and we have a chance to go to the 10, or break the Globex high, and we had a chance to visit last Friday's high. Pretty simple, right? So we broke down, beautiful shot to the 10, and of course, we just kept on going from there. But you were already set up for it. All you had to do was target the breakdown of yesterday's Globex low. Yay! But who cares, right? That's yesterday. Focus on today. We're underneath the 10-day moving average now. And we do not have a 310 cross on this the way that we do on the NASDAQ. So we don't have a confirmed surge to the downside. But you can see that it's coming, right? The white line, it's almost there with the blue line. Once they cross, that'll be a surge signal like it did back here. Where was it? Right there? Yeah. And then, of course, the same thing when it comes back up. Surge signal. But we're still above the 20. We haven't even touched it yet. We're certainly not at the 30. So NASDAQ getting hit a lot harder than the S&P. Not a surprise. It usually does. It runs farther to the upside and then it falls farther and faster to the downside because that's just the balance of things. But even here, we don't have a pullback yet. So we don't know if this is the low or if it's just a low along the lows that we're going to continue to get, because that was a low and that was a low, right? We're just working our way down. So we haven't turned. We don't know what we're going to get yet. We certainly haven't made any run back towards the top to know if we're going to get a lower high, an equal high, a new high. No idea. But so far, this is just profit taking. Now we'll go through my tools later in the week, say Thursday afternoon or so, and really evaluate what's going to come out of this. But for right now, I wouldn't get heavy short, taking some shorts, right? Just kind of shopping around for something cheap, looking at things that maybe have run way too hot, way too far, way too fast, that might make good short opportunities in a short term. think something that is, like Palantir or something, it's been just ripping wildly and is ready for a pullback. I think those would be worth shopping around for, but short-term trades, right? 8 to 10 days at most, because this pullback could very likely be like this last pullback, and the whole thing was done in about a week. Then we rebalanced, and it took time to climb back out of that hole, but the shorts were done in a week, right? We are below the volatility trigger, so you want to keep that in mind. But the put wall is below us, and it is below that 20 period daily moving average. So break the 20 first, then we'll get into that zero gamma level. And then, of course, we got 63.92 cog line down there. And then we'll run the 50s. We're already underneath 64.50, so that puts 63.50 on the table. If we cut through that, then we've got 62.50, which would also give us a 50 period moving average cut. It's been a while since we cut that 50, right? It's all the way back here when we resolved the April drama and the bond vigilantes and all that, and we started to get into the end of April into May. We haven't been back. Today we had an inside day breakout. Just like it sounds, we broke outside of yesterday's range, and we managed to get back inside again. This is kind of a key thing. We need to keep it. When we get a breakdown or a breakout like that, and we get back inside of that range, we really need to keep it. Because if we go back outside of it again, it's likely that we continue the move. That's just the way it goes, right? Yesterday is a good example of that. We broke outside of the previous day's range in the Globex. We got back inside. The next time we broke out, we kept going. Okay? You might notice that everything changed last night when Europe came online. It was consistent and persistent all through the Asian session. Then we bottomed out, waiting on Europe's open, and everything turned around. We've been above VWAP since then, and we're kind of working our way up off of those lows. Be careful of that. If Europe is the reason that the market turns, when Europe closes in our regular trading session, their influence can end. So if the only thing holding us up off of those lows was Europe's participation, and then they go offline, we could lose that support. Also, on this move back up, it's worth marking out your Globex range to see where we're at in the half. So we rejected the half here, managed to get back above, and was actually holding it. Candle closes, everything was good. Now we've cut back underneath it. That's a little bit of a concern. We shouldn't have come back down underneath the half, but run Linreg on it, and you can see that we're just running the channel, right? So that if we was to go into a different time frame, you can see the swings. And if we convert that into a channel, we're just running the edges, right? So we got to get a lower low. And that halfback, having already been broken, we've run through it a couple times. It doesn't have any value to us anymore. We did get close to the lower ADR. Close doesn't really count in this regard because it wasn't close enough. If it was within a point or so, that'd have been different. But we're still a long ways off. So that doesn't count as a hit, especially since there wasn't any really big gap that could have screwed it all up. I think I've shown those before, right? Because the way that this thing functions, depending on what platform you use, it'll either use the 4 o'clock close or it'll use the 6 o'clock open. And those can be two entirely different things if we get a big move. But this one's running from the 6 o'clock open. It's not out of line. And so we haven't hit either one. And this closeness wasn't close enough. Since we are closer to the lower one, that's the default position, is that we'll just go down there and hit the lower one. But we're only down not even a quarter of a percent. So sure, we can get on down there. There's 6411 cog line. And then the 6400 round number. If we overshoot 6400, we've got 6392 cog line. Almost equidistant. So that's a nice setup. Break 11, get to the ADR half, break that, and get to the next cog line at 92. Level by level by level. No market maker move this morning. They're not hedging. As I said, there wasn't any real fear yesterday, right? It was a very orderly and systematic, not panic selling or anything like that. Today's floor pivot significantly lower than yesterday's. That's bearish. Price opened underneath it. That's also bearish. And we haven't hit it today. So that's an MDP, but it won't count until tomorrow. So we can look at it all day today and say, yeah, we haven't hit it yet, but it still won't be an MDP until tomorrow. Base case scenario is we hit that thing, because that's generally what we do. If we don't hit it, that adds to the bearish bias on the week, which can change at any time because it's a headline week, and Jackson Hole is going to be the fulfillment of all of this angst that we've been seeing all week, right? So all the drama and the hand wringing and the profit taking is all pointing towards Friday as the end point. And from there, it will be a sea change within the broader market. We're either going to start working through the S&P daily chart, lower highs, lower lows, and begin to flush our way back out in something that looks like this, or we're going to hold the line and begin to rise again and retest those previous highs. Now, it could do something like this. It doesn't owe us breakouts and moves higher, and it doesn't necessarily have to go lower. It can just do that right there. I mean, I don't care from a day-to-day standpoint. We could trade this. It's fine. Absolutely nothing wrong with it. But from a swing trade standpoint, if the broader market is doing this, then it's going to be a stock picker's market. You're going to want to be very selective of the stocks that you're swinging. It's different when, you've got an established trend in the market and 80% of everything out there is moving to the upside. Anything you throw a dart at is moving higher. So we need to see how things go after Friday, what we get out of Friday, to have some bigger perspective. For today, we want to focus on this floor pivot. If we get back through the Globex mid, then we can challenge the Globex high, get inside this channel and hit that floor pivot. We are underneath the weekly pivot. That puts us in a bearish posture. But we're not far enough away from that weekly to even consider any sort of mean reversion. We would need to go a long ways south before we consider anything like that. At this point, we want to just get back above that weekly. If we get through the daily and we continue to move to the upside, then that'll be the target, is getting to that weekly, which is also the Globex low of yesterday. So it's another structural level. It is worth considering, where's the SNR this morning? We're at S1 and it held. That offers R2, which is 5202. Oh, that's a long ways off. 75 points. I mean, I'd take that, but that's a long ways off. Just to be, more of a realist, R1 would be more appropriate than an R2, but S1 did hold. And there is the trade logic of an S1 to an R2. But there's plenty of history where we go from an R1 to an S1 or an S1 to an R1, right? It's just a 1-to-1. It's like playing the ADR low to the ADR high, right? Same logic. So we've already done the low end. We could do the high end by the end of the day. That would not be bullish, by the way, right? That would just be a part of this mechanical swing that we're working on. It would be the upside of that swing, especially if it sets us in a lower high that's lower than that. So we can run up and tag R1 and still stay below that level. So it would not be bullish just to go up and hit the R1, but it'd be a nice trade. And it would get us back above the weekly pivot point. So get through our mid. I didn't catch that low perfectly with the drawing, but you get the point. Snap the quadrant lines on there, get back above the mid, get through the high, then the floor pivot, the weekly floor pivot, yesterday's high, and on up through the other side. Otherwise, if we challenge our own Globex low and we break that, then we've got S2 as the next target lower. And the 20 period and everything else that we talked about. All right, yesterday we spent a little bit of time talking about this 6411 zone. Point of control back here and here. We didn't get a point of control, but it was a high value node there. Another one here. So there's a lot of structure down here. And so far, we're seeing that play out. It needs to hold, right? I don't know any other way to say it. Like, that thing needs to hold or else. 6350 is on the table. Ten-day, 30-minute volume profile in TPO. I mentioned yesterday that this volume shelf has days to go before we can wipe it out, because we're not even to those candles yet, right? We got to get through Wednesday into Thursday, and at some point through Thursday's session, we would start to hit those candles. But if we dropped back down in here before then, that we could start laying out new volume footprints at this level, and that's what we've got, right? Now we're here, we're building out a new structure. So it's very likely that if we hang out here for a little bit, this point of control is going to move down to 6411 area. And that's where it came from, if I remember. So it's just going home. It's not likely to happen today, right? Unless we get back down into that 64 again, or if they really come in and defend this low. But now that we've left this point of control behind, if we make a run back at it, it will act as resistance. when we were just hanging out here, we could cross back and forth through that level. It wouldn't matter, right? It wasn't supportive or resistance, more like a gravity point. But now that we've left that zone, if we make a run back at it, it will be resistant. We do not have a new VPOC from yesterday since we cut through that line. But it might be worth marking out as just a regular point of control for today, right? There's a difference between the VPOC and a POC. The POC is just a point of control. It's just what I marked right there. A VPOC would be if we have hit it or not. And of course, we've already hit this one, so it's not a VPOC. But I would say it's worth marking that out since we're struggling at that level anyways, right? And we've got one underneath this that we've been fighting with for a while here. I don't have the profiles drawn back that far, but you get the idea. We've got one here, and it looks like it's in play today, so we'll keep our eye on that one. So now we're trapped between these 2 points of control. From a swing trader's perspective, we would use both of those, and that would be our zone, right? If we were doing this like with equities or something on a higher time frame, this whole thing would be a zone. But for our purposes, we're just looking at what we've got overhead. Yesterday's point of control. I don't use anything more than the round point, and you can see that this one's on the half. So if you want to dial it in and get it just absolutely perfect, that's on you. I'm good enough right there. It's close enough. So at 6409, that's really close to 6411 cog line. It's a point of control from about a month ago. And then yesterday's point of control. You can kind of read the tea leaves, right? That distribution from yesterday, most of our Globex run, at least, especially in that 7 to 9 time frame yesterday. Then the sell-off and a lot of work that got put in the afternoon yesterday down in this structure. And it's from all that work that got put in the afternoon yesterday that we got that point of control. You don't want to look at that level as like a support or resistance level, because that's just putting bias into it. Just look at it as a fact of what it is. It's where the greatest amount of trading took place yesterday. That's not sharing any bias or, you know, putting my portfolio into the analysis. That's just the facts, right? That's where the greatest amount of trading took place. If we were to revisit that level today, it's very likely that we see some trader remorse or more trades at that level from people who didn't get a chance to get in yesterday, or people who got in yesterday and are now reconsidering things because, well, we're right back to where we were yesterday. It should be a key area of interest where we see accelerated trading activity. Keep it on your radar as a level of interest, especially in the intraday. We're still in the Globex. And a lot of analysts who use these sort of levels from the previous day, they won't even count them as being hit if they're hit in the pre-market. They'll only count it after it's hit in the regular trading hours. To each their own, right? I'm not so picky, but others. The lower edge of the weekly expected move, 63.83, basically, or 82. We're not there yet. Haven't hit it. We still have all of that we could move to the downside, and it still wouldn't be bearish. I got to keep bringing that up, right? Don't get all bared up and think it's time to short this market. And hey, I mean, it might be. Looking back a month from now, we might all be saying, oh yeah, that was the perfect reversal right there. What an awesome short. I mean, right now, we don't have it. And looking at how far we could move on the week, we haven't even moved to the lower edge of our expected range. And this just fits the dynamic of how far price could move this week and still maintain its normal move, right? So don't get all bared up yet. We don't have that sort of confirmation. And to be fair, waiting for confirmation is expensive, right? If you wait for it, you miss the meat of the move, and you have to often pay a lot more in risk management than you would want, rather than just getting in before you get the signal. So I'm not telling you that waiting is the only way to play this game, just that we don't have any short signals for a confirmed short trade yet. We're still above the 10-week by 2%, and that's a good place to be. We're not overbought, we're not overextended. Even on the drop this week, it didn't put us into extremes, and it didn't even get us back into the zone of the 10-week. It's like a 1% above and below the 10-week. We're not even in that zone. So we're still good. When we look at the swing trade time frames, there's absolutely nothing wrong out there. Put it on the daily, sure, we're below the 10, but we'd already talked about this on Monday. You know, the idea that we could get below the 10 and get one of these resets, or maybe it was Friday, right, when we were talking about this. I don't know, they all blur together. We talked about this recently, how we were working our way back to the 10-day, and the discussion was it going to be just a little blip like one of these, or was it going to be a couple of days where we stayed below the 10 before we worked our way back up again? In either one of those scenarios, it's not a heavy short, right? It's not a big, broad market sell-off like, say, back here in March and April. We would need March and April headlines to get that kind of sell-off now. And that was global tariff regime changes and, you know, bond vigilantes. We don't have that sort of headline right now. We don't even have that sort of drama right now. All right, so looking at what's down this morning, we don't have much that is down to meet our benchmark of 0.5%. I mean, really, we got some weakness in a lot of things, but not down enough. And looking at what's up, it's the same thing. But we don't have much that's up more than 0.5% yet. Bitcoin and gold. That's it. Don't get me wrong, Bitcoin being up is nice. It is risk appetite coming back, but that's not enough, right? There's not enough from that to get the flows that we need to get the drive to the upside that we would require out of the broader market. So at this point, we don't have market breadth. We don't have treasuries, bonds, yields, dollar, commodities. We don't have any of those giving us a drive to the upside or the downside. No positive or negative market sentiment structure out there. And of course, we definitely don't have options flow because it's not past 9:30. So we don't have anything. Just like yesterday, we could get any of those things once the day has begun. But at this point, GTFO, as usual, it all starts with getting out of the box. And this is the first box to get out of. It's our own Globex range. We're holding above VWAP and we're working our way back. So just look for the next higher high, higher low, which, you know, we're getting a little bit of a discrepancy here because we got a higher high, but a lower low. It's a little bit of a megaphone pattern starting to broaden out here. We got to get back above our own Globex high, and then we can work through these levels from yesterday. $64.47 is the half back of yesterday. That's not perfect because I missed the bottom down here, but get the idea. Close enough. So if we can break this Globex high, we'll aim for that. If we can get through that, then we've got the weekly floor pivot, and then the RTH open, the RTH high, and then on up through into, say, a 111 and a 1236 on the other side. 64.92 cog line up there. If we break the Globex low, which is also the cog line 64.11, then we've got 6400, 63.92, and then 63.50 because that's the next 50 level. That would put us completely under the 20 period, just like we are on the NASDAQ. Cool, cool. Simple enough. GTFO got to get out of the box. Auction today. FOMC minutes this afternoon. Oil at 10:30. And even though oil is one that we don't see the impact of as much as we would have, say, 10 or 15 years ago, oil can still cause some shenanigans. So keep your eye on it, especially with the whole Russia thing and all these talks about punishing Russia if they don't step up to the table. It's going to be, well, there's already been a lot of talk about how much reserves there are out there and if Russia's going to be allowed to bring their oil back to market. If these talks play out well, then there's going to be way too much oil. So keep your eye on oil, right? 10:30. That's what I got, everybody. Be careful, be safe. I'll see y'all tomorrow.